Hi everybody, Jeff Yastine here. As always, write to me. Love to hear your comments. The address is jeff@yastine.com, and follow me on Twitter and Facebook. I'm posting on there most days. Now, a few months ago, everyone was asking me about Moderna, mRNA, the vaccine producer. Should I buy the stock? How high could it go? My answer then was the same as it is now. Yes, in my opinion, we should own the stock. We should buy it. But now there's an added twist. Thanks to end-of-year portfolio sales by Wall Street, when traders typically take profits on their short-term winners, regardless of prospects or fundamentals, Moderna stock is down more than 40% off its December highs. And I think we should make the most of this temporary weakness because this one's setting up to be a good one for the year. So if you didn't get the holiday gift that you wanted, I think Wall Street's offering us a great one right now. I think Moderna here at roughly $105, $108 is one of the best value plays of the year at its current level. It's off around 35, 40% from its December highs, and I think it could at least double and might even have a shot at tripling by the end of the year. And I'll explain all that as I go on here. This goes to a point that I make often. If you're a new investor or a speculator, first of all, we need to train ourselves to buy stocks not when everyone is shouting the same company's name on CNBC and Twitter, but at times like now when the stock has suddenly cooled off like Moderna's has over the past month or so. And all of those same folks who were saying, what a great stock, look at the trading action, etc., are then nowhere to be found. That's the time to strike for many of these. Now, I know what you're saying, Jeff, look at the chart. Moderna was down around 40%, 35% in the past 35 days or so. Is there something wrong with the stock or the vaccine? Maybe the trading action's trying to tell us something. Now, in my judgment, that is not the case. Now, every stock comes with potential risk. It also comes with potential rewards. And our job as investors is to use the tools available to us to assess both and then figure out whether we then want to own the stock or not. Now, as for me, I've owned Moderna from the $60 to $70 range for a while now, and I haven't sold any shares, and I would want to own more now that Wall Street has temporarily knocked down Moderna's price to what I believe is a bargain level once again. Now, here's what I mean when I say bargain. Even though Moderna's shares are down since December, Wall Street analysts have been steadily raising their earnings estimates for the stock. Back in November, the last time I mentioned the stock in a video, analysts expected Moderna to earn around $7 a share in profits for 2021. Now, those same analysts have raised their median projected profit forecast to more than $10 a share for this year, with a similar amount of profit expected for 2022. Now, that's a huge amount of money for a company to make, like Moderna, going from a series of losses in past years as it developed this revolutionary messenger RNA biotech development platform, and is now using that software and analysis system to research, create, and produce a life-saving pandemic vaccine in basically less than a year's time. Now imagine all the other tools that could be used for cancer research and all the rest. So if we divide the stock price, which is around $104, $106 by this year's expected $10 a share in profits, we get a price-earnings ratio or multiple of a little over 10. Now, that's just ridiculously cheap by any standard. Conservatively speaking, Moderna ought to at least have a PE ratio of at least 20, if not 30 or more, in keeping with it being a successful biotech that's about to start gushing huge amount of profits this year and next. So, I don't expect Moderna shares to stay at this depressed level even after Monday's spike higher, and here's why. The biotech, Moderna, issues its next earnings report in March. And analysts expect the company to post its first ever profit of around $1.51 a share for the quarter, with more big quarterly earnings numbers to go as the year rolls on. And my belief is that we'll see Moderna stock move higher as we approach that March earnings release date. And as the company is able to show its ability to generate profits, Wall Street will warm up to the stock and assign it, I believe, a much higher PE ratio of 30 or perhaps higher. So if we take that PE of 30 and multiply by the $10 a share profits that Moderna should earn by year end, that gives us a stock price of around $300 at some point late this year. So that's the pitch on Moderna in a nutshell. It's been temporarily beaten down since early December, just basically because of the weird dynamics of Wall Street trading at year end. But with COVID vaccinations continuing and the company demonstrating its profitability in coming quarters, those same Wall Street traders will want to buy in a big way, and I believe send the stock much higher as 2021 rolls on. If you like what I'm talking about, make sure to subscribe to our YouTube channel, follow me on Twitter and on Facebook. I'm Jeff Yastine.